German investor confidence increased for a third month in October, given the impression that analysts believe in the invulnerability of the German economy, even amid the turbulence emanating from the US fiscal standoff. Joining me down the line to share his insights is Dr. Sylvain Broyer. Sylvain, financial markets are flickering at the moment because of the uncertainty surrounding the discussion about US debt. But some analysts say today's report suggests Germany's economic outlook remains solid, and the past weeks have shown that the recovery in Europe and other important markets will continue, although it won't be very fast. Is this in line with your estimations?
Yes, indeed. Germany looks as an island of happiness among the Eurozone countries right now, and even among most of the G7 countries. The country is at full employment, and we can see rising consumption per capita. It benefits from very low interest rate, and investment in construction is buzzing. Net migration from the European periphery to Germany has added 0.2% of GDP growth this year. The balance sheets of households, non-financial corporations, and even of the states are clean. It's a huge contrast to the rest of Europe. So all in all, the situation is bright. But I would mention two weak points for the German economy right now. First, municipalities are struggling to cope with the debt break, and the consequence of that is very, very low public investment. It's even lower than in Spain right now, less than 1 percentage point of GDP, and it is negative in net terms, so meaning that Germany is disinvesting in public infrastructure since 2002. That's a weak point. The second weak point is that, for me, is that German corporates continue to strike over domestic investment. Productive investment has fallen this year from 8.5% of GDP to 8%, so opposite to a move as in the US. The German corporate prefer to invest abroad or to pay high dividends to their shareholders. That's not good for potential growth.
Germany's top financial officials said risks to the global growth are shifting away from Europe and toward emerging economies, while they expressed confidence that the US policymakers will overcome their divide over the budget. Do you agree that pressure on the bloc has finally eased somewhat?
Well, I think we should remain cautious on the Eurozone. On the one side, for sure, I can see positive developments in Europe in three ways. First, the risk of a breakup of the monetary union has diminished after the ECB committed itself to intervene on the sovereign debt markets under strict conditionality. And with the project of a banking union based on a single supervision mechanism and a single resolution mechanism. That still needs to be clarified, but that's making progress. Second, deregulation of the labor and goods markets in the periphery is showing green shoots. For instance, lower dismissal costs in Spain are helping to slow the decline in employment. And thirdly, you can observe the kind of Schumpeterian renewal of the manufacturing sector towards higher value products in Portugal, in Spain, and even in Greece, in the metal industry. But having said that, we should not forget that the institutional framework of the Eurozone has only made progress in dealing with moral hazard, the two-pack, the six-pack, but without a deeper political union. I'm afraid that the European Monetary Union remains a bad system of fixed exchange rates, unable to stop the disindustrialization of the periphery and to give young people their chance. Growth will remain weak for years, and the burden of public debt is almost as high or even higher than the total deficit to GDP allows. It's 5% in Greece, 5.4% in Italy, and so on.
So the hunt for Merkel's coalition government continues. Schäuble said yesterday the new government could be ready by mid-November, which contrasts with concerns among some negotiators that talks could drag out until the start of 2014. Would you say this is more a frustration than a concern, but nonetheless one which could hinder the progression towards a banking union and sustainable economic growth?
What is frustrating to me, indeed, is to see that for the first time in years in the whole European democracy, we saw after an election that the outgoing government has been highly praised by voters, with the CDU-CSU union near from absolute majority. And despite these very good results, we see that the formation of a new government in Germany is almost as difficult as it was in the Netherlands, in Italy, and so on. So that's frustrating for sure. Anyway, I have no doubt that a new German government will be formed before the end of this year, probably maybe before, well, who knows, and probably with the SPD, the Social Democrat, as partner. In that case, it would be interesting to see whether Mr. Asmussen will play a key role or not in the next government, and who can replace him in that case at the ECB board. Maybe a woman coming from the wise men, the German wise men. It's a possibility. And at the end, this political game should not. I think they will not jeopardize the fragile but ongoing European recovery.
Sylvain, given everything that we have discussed, what is your outlook for the euro against the dollar?
Same thing as the last time we comment on that. If you look at fundamentals, the euro should weaken against the dollar for sure. So we expect that to happen once the budget debate in America has been over. Another point may be also the statement of the German Constitutional Court on the constitutionality of the OMT program. And at Natixis, we continue to see a target for the euro below $130 in 3 months.
Sylvain, it's been a pleasure speaking to you. Thank you so much for your time. Well, viewers, that's all I've got time for at the moment, but click back to the website for today's press review, looking at how Burberry CEO departs after developing a taste for Apple. Goodbye for now.